Gentlemen, I'd like to invite Mike up to give us a few words. Mike Kelly, Director of Government Affairs. He's going to give us a brief overview of this year's legislative session. Thank you.
Thank you. Our in-house IT department / legal counsel is going to turn up the volume on this mic. AV Club. It's paying off, Anthony.
All right, Mike, go ahead.
All right. Is that any better? A little bit? All right, great. Well, good morning, everybody. How are you? Just give me 1 second to fire up this bad boy here. Come on now. Please work. Sweet Moses, please work. Okay. Okay. From the beginning. We'll do it from the beginning. Okay, we're winning already. All right. I usually just speak from notes that I write on this, but I thought this time we'd try something a little bit different, and because I think there are some very, very technical legislative issues that we're facing as an association that I think are worth covering. So first of all, thanks for taking the time to come here this morning. We have a lot to talk about, for better or for worse. Albany is not Washington, D.C. It does things, and we saw that in full force this year. So today I'm going to talk a little bit about some of NYSAR's legislative priorities, some of the activity that the state legislature took, and then specifically get into some of the provisions of newly enacted expansion of rent control to outside of the scope of the downstate marketplace, specifically New York City. So let's go ahead and get started. So elections have consequences, and I think we saw that and most parties saw that more than even I think most political observers in Albany would have predicted or would have seen coming out of the 2018 election. So let's take a step back and look at the makeup of the state legislature. Prior to 2018, we had a Republican Senate, 32 Republicans, 31 Democrats. In the Assembly, it was strongly in favor of Democrats, a wide margin of at least 2-1. So 2018 elections happened. The state assembly essentially stayed the same, and its current makeup is 107 Democrats and 43 Republicans, primarily Democrats from the downstate region of New York. The state Senate is where the major flip happened. So again, prior 32 Democrats, or 32 Republicans, 31 Democrats. Out of the 2018 elections, there now are 40 Democrats, complete reversal, and only 23 Republicans. So this led to strong unity and strong Democratic majorities in both houses, and led to the passage of very large historical pieces of legislation that have been waiting. If you think of it like a barrel, just like expanding and expanding, especially just pressure building, and that release valve, well, that release valve was the 2018 elections. And once that was released, a whole slew of legislation started to move in Albany that before wasn't able to move because of Republican control in the state legislature. Things such as the expansion of rent control and tenant protections, and we'll get into that more in just a minute. A Farm Workers Bill of Rights. The DREAM Act. The DREAM Act allows for taxpayer-funded tuition assistance for the children of undocumented immigrants in New York State. Driver's licenses for undocumented immigrants. A Child Victims Act, which for a 1-year period opens up the statute of limitations and eliminates that. So for a 1-year period, victims of sexual abuse by the clergy or by other parties can bring suit to those individuals, against those individuals. A Climate Protection Act, which seeks to turn New York State away from fossil fuels, all fossil fuels by 2050. Equal pay for equal work, so women get paid the same amount for the same job as men do. I'll pause for that. That was an interesting conversation at the Kelly dinner table with a wife and daughter, so just to let you know. the question was asked, does NYSAR have a position on that? And I said no, but I'd be happy to bring it up. Decriminalization of marijuana. No applause. I thought we might get some applause. Okay. But I leave it up to you. I leave it up to you folks. I don't have an opinion. NYSAR has an opinion. That's up to you. And mandatory sexual harassment changes. So my point is, in our world, we're seeing major changes. But my point is, we're not alone. Albany is seeing major changes in terms of the political makeup of the legislature, as well as some of the legislation that we're seeing come before us. So let's turn a little bit quickly to our legislative priorities in 2019. Some of the other activity we saw. Some victories that we had: making permanent of the property tax cap. This was an effort that we supported, that we got behind from the get-go, from the beginning of this program, and we were very happy to see that the tax cap was made permanent in New York. Changes, legislative changes that we sought, that make changes to CE requirements and also eliminate grandfathering. That legislation passed by both houses and is now going to be before the governor at some point. It has not been called to the governor's desk yet. The same for a clarification of a law that NYSAR supported in 2018 dealing with appraisal management companies. We saw it a technical clarification to ensure that real estate licensees would still be able to work with banks and AMCs in the activities that they were doing prior to the passage of the law in 2018. Excuse me. On the positive side for us, the defeat of several bills. One of the larger pieces and most progressive pieces that tenant advocates were seeking in this debate about rent regulation, the enhancement of tenant protections, was a good cause eviction bill. It was a standalone bill, but it was also part of a larger package of goals sought by tenant activists. This good cause eviction bill would stipulate in law several reasons, 9 or 10 of them, and these would be the only reasons in which a landlord could evict a tenant. Absent one of those reasons, that tenant would be for a perpetual and forever tenant if they paid their rent on time. The second, and I think most onerous piece of the good cause eviction bill, was a stipulation that would say annual rent increases could only go up 1.5 times the CPI on an annual basis. We'll get into the process for rent regulation expansion throughout New York State in a moment, but by a signing of a pen of a good cause eviction bill, that would have meant rent regulation for the entire state immediately of 1.5% times the CPI. So that bill was defeated, and I think that was a positive. The defeat of a new flip tax on New York City residential property. So properties of 1 to 4 units, New York City only. And the intent by the sponsors is to slow down development. They are seeing that in their eyes, residents of their community can no longer afford to live there. So the sponsors of this legislation, Senator Julia Salazar from Brooklyn, a self-proclaimed Democratic socialist, and Eric Dallon in the Assembly. Mr. Dallon is much more approachable. We met with him, staff met with him last week with Marcia Clark, who is here in the room with she is our New York City Issues Working Group Chair, and expressed a lot of the concerns we had with this legislation and its negative impact on the transfer of real property in New York. And at the end of the day, the revenues that New York City and New York State get from the transfer of real property in New York. So that bill was again defeated in 2019. Defeat of 2 bills that deal with cease and desist. Again, back to the affordable housing issue, over-aggressive marketers trying to entice folks to sell their real property, investors from overseas. So there are 2 paths to cease and desist. One is a regulatory process through the Department of State, but some lawmakers have said, that's not fast enough, and I want it much broader than what the DS will do. So they've put legislative proposals in that will create a cease and desist zone for the entire borough of Queens and the entire borough of Brooklyn. So NYSAR opposed those 2 bills, and they were both defeated this year. There was also a defeat at the New York City level of a bill. It's defeat, but I would say humbly, it's temporary because it is still an issue. The bill is not dead yet. There's an effort by certain Manhattan lawmakers, city council members, to cap the amount, cap the commission. We call it a commission. They're calling it a fee in their proposal. The commission that a real estate licensee could collect when representing a landlord when renting out an apartment to a tenant to 1 month's rent. The concern for us in the big picture standpoint is government getting involved in your commissions. So we are very, very active on this. We have met with these lawmakers multiple times. I'd like to thank and applaud the members of NYSAR and New York City's local boards that got active and came to an in-person meeting that we had with these two city council lawmakers. Also came to a public hearing that the city council had on this issue. We testified, we were very vocal against it. So right now, I think the lawmakers have heard our concerns. I will tell you that I don't think it's over yet because honestly, it's never over because they can always introduce a new bill. But we have been able to shift their interest to a Tenant Transparency Act, a tenant's bill of rights, if you will, in which the tenant would know what types of fees and charges they would have to take on at the onset of renting an apartment. So that's where we hope to continue going. So let's look quickly, because we have a couple other speakers here, at one piece of the rent control, rent regulation changes that we saw this year. Nick Mastrosimone is here, and he'll speak to some of the landlord-tenant changes. I'm going to speak to the potential expansion of rent control to municipalities outside of New York City. So this law, again, passed by wide margins in both houses. This was not a close vote. It was very, very much on a party line basis, 95-46 in the Assembly, 36-26 in the Senate. Let me talk real quickly about that Senate vote. It looks closer than it is, okay? Remember, 40 Democrats versus 23 Republicans. So a couple things to note there. 26 people voted no against it. So what does that tell you? What that tells me is you had marginal Democrats in, quote, purple districts, newly elected in 2018, just a year ago or so, that said, this vote is too risky for me. So the Long Island contingent of New York State senators all voted no on this rent rate bill. That's why it looks a little bit closer than it is. Leadership in the Senate knew that they had the votes and took the political action to let them essentially take a walk on it. That kind of diminishes a little bit. I don't mean to do that. Probably some of the concerns that those senators had with the legislation on their own, their personal concerns with it. So the political reality, though, is that majority in the Senate allows leadership to let a certain number of their members vote with Republicans to protect their political interests. And then at the end of the day, the next step is protect the majority of Democrats, because if they get elected again, we have a majority again. And this next set of elections is critical for the Senate, because if they hold a majority, they will control redistricting and the construction and drawing of those maps. This is just a hunch. I don't think they'll be favorable for Republicans after Democrats get done drawing the lines. Call me a cynic. These laws, these rent regulation laws, have been in effect since just after World War II, when there was a housing emergency in New York City. Again, what really happened is the elimination of a geographic restriction of rent regulation. It was a very simple change in the law in that they just struck out New York City, and by leaving it blank, it by de facto meant the entire New York state. So it is now permissible across the state. So again, why did a lot of people have been asking me during these business meetings, how did we get here? Why did these pass? A variety of reasons, some political, some on the merits themselves. So again, strong Democratic majorities in both houses. Rent regulation extension and making it permanent was the number one, and increasing tenant protections was the number one priority by Senator Andrea Stewart Cousins and her colleagues in the Senate Democratic Conference, as well as Carl Hastie and his member 107 member Democratic Conference in the Assembly. They were extremely frustrated, as were tenant advocates, that coming out of the budget, they didn't get a bite at the apple there. So within a day of the budget passing, a lot of times lawmakers will want to around do a little parade of, look at all the great things we did for New Yorkers and the people of New York. They pivoted very, very quickly to, we did some positive things, but we need to get rent control, not just extended. They didn't want just an extension. They wanted a revamping and a strengthening on landlord-tenant laws on behalf and in favor of the tenant, and that's where they went. Let's look at quickly what happened. How rent regulations prior to this year, them being made permanent. Let's be clear. Nothing's permanent, because as soon as you change a law, it's not permanent anymore, right? It's permanent statute right now, just like the tax cap is, by the way. But what happened every 4 or 5 years prior to this year is Democrats in the legislature had to come to Republicans and a Democratic and or Republican governor every 4 or 5 years when those rent laws expired. And what happens in politics? Does the other side say, we'll just give it to you, that's a great idea, we support it? No. What do they say? What are you going to give us for it, right? That's Albany. That's politics. So every 4 or 5 years, Democrats in both houses had to say, here's my handout. My number one priority is extension of rent control. And by the way, just extension, not enhancements. For a generation, just extensions. What do you need for it? Well, Republicans often ask for things like charter schools or the tax cap, you name it. So there's a laundry list of things that were bartered just to get that extension. So imagine being the Democrats trying to just get their number one priority done on behalf of tenants for years and years and years, and having to fight and give something back to Republicans, which was loathed to your conference. But at the end of the day, you had to get rent control done, so you had to give this. So that's been happening for a generation, long before I even got to Albany in 1993, leading to frustration and anger. One piece that you're not going to probably read too much about, but you got a sense of it at the legislative hearings on rent control, was the political side of this whole discussion. Where were campaign dollars going into who? So for years, the largest supporters of the Independent Democratic Conference, which the Democratic Party hated because they saw them as betraying their party because they conferenced with Republicans to give them that slimmest majorities of one vote, right? 8 IDC members. Well, who were the largest supporters of the IDC while they were in power? Real estate interests from the downstate market, RSA, Rebney. I'm not criticizing those political investments. I'm just telling you that was a fact, and that's well known in Albany. The same goes for the largest supporters of Senate Republicans, Rebney, RSA, keeping them in power. So the Senate flips. Who do you think the number one target is going to be when they start to look at legislative activity? They already wanted to do some of these things anyway. So at the first hearing that the state assembly held, RSA came up to a panel right in front of state lawmakers, and the discussion theoretically is about the merits of rent regulation, rent control, landlord-tenant laws. Let's have a discussion about the pros and cons about that. Wrong. The first question out of the state lawmaker's mouth was, can you tell me, first of all, thank you for being here. Can you tell me how much political support and campaign dollars you've given to the IDC and Senate Republicans over the last 10 years? It wasn't about the issue at all. My point is, this was such a political issue that I think the legislature was, in some part, was taking a shot back at those real estate interests. You're probably not gonna read that anywhere, but you could feel it in the room that this was very, very personal. And don't think for a second that state lawmakers don't know who those folks are giving money to. It's all public. You can go to the State Board of Elections, and I can assure you their leadership is sharing it with them. Another big piece was the unification of support behind leadership in both houses, in the Assembly and the Senate. So while there were probably some Democrats in the state Senate that said, I have a lot of concerns with this, right? These are, we should maybe be a little bit more moderate in this law. At the end of the day, what happened was the governor, to a certain extent, poked him publicly and said, I'll pass. I don't think the Senate or he didn't say the Assembly because he knew the Assembly had the votes. I don't think the Assembly has the votes to pass the bill as it is right now. The next day, what do you think the Senate does? Yes, we do, Governor. We have plenty of votes. So there was a unification of support behind their leadership and Andrea Stewart-Cousins and Senator Michael Gianaris to do rent regulation. So they called the governor's bluff. And the problem for the governor is he said if the legislature passes it, I'll sign it into law. And sure enough, that's exactly what he did. Let's talk about rent control and where it's going. And is it coming to my town? It could be. So right now, we are closely monitoring what some of our political representatives, our regional GADs and our other GADs that work for some of your local boards. We also have a online database that we're watching to watch local government activity as it relates to rent regulation, the imposition of rent regulation in your town. So what has to happen? There has to have a determination of a housing emergency of 5% or less in that community. One, you have to have a public hearing, and then that local government has to approve a resolution and pass a local law in support of rent regulation, rent control. What's not included and of concern to us is a clarification definition of how does that local body get to that 5% threshold? I don't know. It isn't in the statute, and that's one thing we brought up in the whole rent regulation debate as the legislature was moving forward. We testified to that fact, and it fell on deaf ears. It's not included in the new law. Another thing that's not included is there is no local referendum. So the town board does not have to hear from its residents via a vote or a referendum of the public. I think that's unfortunate. But I will assure you it's intentional that they did not want to go down that road. So it has to be approved by the local body. The concern I have is this can happen very, very, very quickly. And that's why we're watching all local media outlets, watching the minutes of local municipality activities. Right now, the farthest along in this effort seems to be the city of Kingston. The city of Kingston, we're not even sure if it meets the vacancy rate standard, that housing emergency standard. But they have approved local funding to do a study to try and come to that determination. We have heard other cities rumbling about this. The city of Albany's talked about it. The city of Rochester's talked about it. The city of Beacon has talked about it. I can assure you I'm waiting for Ithaca to do this, the same with the city of New Paltz as well. So we are watching it. The good news is, to be honest, we're ready for a fight. The NYSAR, its Legislative Steering Committee, and its Issues Mobilization Committee are working through a process right now to approve issues mobilization funds that would allow us to get engaged in campaigns and activities in opposition to these if and when they come before local governments. So you will see two of these motions on the board of directors floor tomorrow in support of that efforts. So what happens? Who does this apply to? It applies generally to residential buildings built or substantially rehabbed before 1974. So if it's new construction, it would not apply. It applies to buildings with 6 units or residential buildings with 6 units or more. The initial rent is the rent amount in the last lease or rental agreement. After that initial rent determination, there would be a county-wide guidelines board made up of 9 people appointed by the DHCR that would determine the annual rate increase in that community. So as if that's not enough, let's look forward. A lot of the issues that I talked about earlier, for better or for worse, are coming again. So the fight is not over. NYSAR is going to be seeking, with a lot of other interested parties, legal clarification about some of the changes and ambiguity that we see in the new landlord-tenant law changes. the rent control fights across the state that I just mentioned, the good cause eviction bill that I mentioned earlier that tenants said, we're coming back to Albany, and they're ready for a fight too. A blanket statewide rent law. It doesn't take much it's not a huge leap to see a lawmaker introduce a bill that says, forget allowing local municipalities to decide if they want to have rent control. California just passed a statewide rent control bill, so did Oregon. How are we as New Yorkers not as progressive as those states? I can assure you someone's going to be thinking about that idea. So I'm waiting for that to be introduced. Reaction to other affordable housing issues, cease and desist, that flip tax I mentioned. And last, and definitely not least, there is newfound interest in the gig economy or independent contractors affiliated with that. Lyft drivers, Uber drivers, other independent contractor status individuals. The concern for us is, do we as real estate licensees get caught up in that effort to turn those independent contractors into employees? And we're going to make sure we fight to protect that independent contractor status. There's a hearing next week on October 16th in New York City. It's not next week. My days are getting by me. I'm sorry. It's late. So, on October 16th, New York City, I will be there. There really won't be an opportunity to testify. My goal there is to make sure that I run into leadership on this issue and staff on this issue, that we actually already have a relationship. I think we're in an okay place, but I don't want to be okay in Albany. I want to make sure that we definitely have a carve out. In the law, the independent contractor law that passed California, real estate licensees were in fact exempted. We're looking to make sure we protect that same status here in New York State. So with that, that's my presentation. So.
I'd like to thank Mike for taking an hour and a half worth of information and getting it to 20 minutes. And I believe that the legislative policy forum for Mike is his Super Bowl. So Mike, thank you very much. Next, we're going to hear from our guest speakers. If anyone has any questions, we're going to ask you to wait till the end of both speakers and come up to the mic, introduce yourself, and propose your questions. So we mentioned earlier, our first speaker is Zack Rubin-McCarry. He's with NAR, and prior to working for NAR, Zack worked on federal campaigns across the country and is a legislative staffer in Congress for Representative Sean Patrick Maloney. Zack is a Washington, D.C. native, graduate of Ohio State University, and with NYSAR, we all work closely with Zack on a host of issues regularly. Zack, welcome. Thank you very much for being here.
How's everybody doing? Can you hear me in the back? Great. All right, let's get these slides queued up. Oh, there we go. All right. So as Mike mentioned, we're not doing a whole lot in DC, so that concludes my report. But no, I mean, he's not that far off from the truth. Congress nowadays, they're in DC, you know, maybe 3-4 days a week. They're voting on things that are, you know, non-controversial, like naming a post office or issuing a commemorative coin of some sort. So, you know, we're tackling a lot of very important issues. But before I jump into the legislative activity, which there actually has been a fair amount, I wanted to kind of give you all an update and kind of a preview of what to expect next year. 2020, as most of you probably know, it's a big election year. The president is up for re-election, as well as the Democrats. As they recently took the House, they have to defend the House all of a sudden, and you know, Republicans, they have kind of a rough map in the Senate. So there's a lot of interesting things to watch here. Kind of the one thing, you know, after last election, I think a lot of political folks kind of got out of the predictions game. One thing that, you know, in talking with our consultants and kind of looking at, you know, the numbers from the midterm elections and kind of forecasting and looking ahead, one thing that, you know, we feel pretty confident, oh, that's, all right, pretty confident about is that we are going to have very high turnout in the election. All right, so the midterm election last year the turnout was very high, one of the highest midterm elections in decades in turnout, and we usually see more turnout in the presidential year. So we anticipate that's going to be a lot of people are going to go vote, a lot of first-time voters. The other thing too is I think kind of the conventional wisdom is that when more people vote, that's generally good for Democrats. That's not always the case. Democrats are really good at clustering in places like New York City or LA or San Francisco. But when you're dealing with all being so centered in one place, there's only so many districts or Senate seats that impacts, or a presidential race. So it'll be interesting to kind of see and watch and kind of keep an eye on how that turns out. The other thing, all right, we'll see. PowerPoint can behave. So kind of looking back the last few elections, 6 out of the last 7 elections have been some sort of change, whether that's a change in who's controlling the House, change in who's controlling the Senate, very big change at state level, which if you look last year for Trump in 2018, Republicans lost 323 state legislators, across the country. It was not great for them. So we do anticipate to see some change. Voters are looking for change. That's a lot of the reason President Trump was elected. A lot of the reason Democrats took the House last year. So this is something that we're not quite sure how this is going to turn out, but it's something to kind of keep in the back of your mind as we're looking at elections. New York, as we're looking at the kind of House ratings, who's going to take the House, if the Democrats are going to hold on to it, New York is going to be one of the key battleground areas for that. So if you look at this list of people, this is 93 members of Congress, all right? So there's 435 total members of Congress. These 93 are the only people who have competitive races. So I've heard Mike say this a few times this week. Your number one job as a legislator is to get reelected. 80% of Congress is basically already reelected, assuming they don't have a scandal or something like that. So these are the races that everybody's keeping a close eye on, and a lot of them are actually right here in New York. Sean Maloney, he's kind of I think he should be safe, but that's a seat that I know Republicans for years have been targeting. All the new Democrats here in New York, Brindisi, Delgado, and Rose, all 3 of those seats, those are going to be very, very tight races, and I know the Republicans are looking to win those seats back. Collins and Buffalo, obviously being indicted, that isn't good for his reelection prospects. You never know, so crazier things have happened. Yeah, it's New York. Yeah, I mean, New Jersey, they elected Senator Menendez. He was, under investigation too, so you never know. And then Zeldin, King, and Katko are kind of those Republicans who've really built strong brands for themselves locally and would really need a really strong, well-funded Democrat to take them out. But, again, it's a presidential year. There's a lot of people that are going to potentially be out voting. So, those are some seats that we're going to keep an eye on. All right, so I want to jump into some of these issues. So these are kind of the key issues. We've polled our members. These are the key issues that really surfaced amongst our membership, and we're really keeping a close eye on. Obviously, as an organization, we lobby on tons of issues. I think last I heard, we were registered to lobby on 30 different issues in DC. So there's a lot of things that impact the housing market, but these are kind of the big ones that are going on right now. So flood insurance, I feel like every time I'm here at Turning Stone, there's like a week later, there's a deadline on flood insurance, and today is no different. So the flood insurance program is set to expire on September 30th. The expectation right now is that a bill will pass. Right now, it's passed the House already. The expectation is it's going to extend the program to November 21st. Now, that's a very short extension, but this is an extension to get time to negotiate. There are a number of members on the Hill who are working to get a longer term extension, and the fact that they have an extension this short and right before Thanksgiving, this is a sign they actually want to do something on this. So it's kind of weird, but it is actually a good sign. The House Financial Services Committee earlier this year, they actually passed a reform bill on bipartisan grounds. This is a different set of legislation, but it would have extended the program for 5 years. So, there's a lot of movement on this issue now. I think people are starting to acknowledge they need a longer term extension. I think the other good thing, I know when I've been here in the past, it's been in danger of lapsing. And for those of you who've responded to calls for action and talked to your members of Congress, the message has gotten through that when the program lapses, that's not good for anybody. So, that's kind of a baseline that we've been able to set, and kind of an expectation we've been able to set with Congress. So that's actually been a positive development too. All right, so infrastructure. We actually, and I'm going to get in this a little bit later. I was talking with the commercial folks about this. So infrastructure is an interesting issue, bipartisan agreement that there's something that needs to be done. The Senate unveiled a infrastructure bill a few months ago that we like as an organization. It included, things like faster and more streamlined process for permitting. It also included, looking at developing roadways, fixing them, waterways, that sort of thing. But the big catch on infrastructure is how you're going to pay for it. And that bill, while it was wonderful, did not address how they were going to pay for it. And in Congress, they need to address that. So there's a lot of disagreement on how they want to go about doing that. But it's something eventually they're going to have to figure out if they want to do infrastructure. All right, and then, okay, taxation. So this issue, obviously, in the past, I've been here talking about the tax bill. Since that passed, there's been a number of provisions that, as an organization we've worked on. We worked to get realtors included in the 20% deduction for qualified business income, which was a huge win for NAR. So that was a big win. We're working with the administration to help implement opportunity zones, which should be really an interesting provision in the tax code. We're also, the other big thing is the state and local tax deduction. So a number of those people I put up on the screen, they ran for election and they beat incumbents on this issue. There are people on the Hill that, they got to Congress because of the state and local tax deduction, and they are motivated to get something done on it. The big issue for Democrats right now is, last I checked, there was like 15, 17 bills on how to do this. There isn't really a whole lot of agreement beyond, okay, we want to address this amongst those people, but they all have different ideas of how to go about it. And, we're dealing with a similar kind of dynamic that Mike described, where we have also an influx of a lot of very progressive members, like Ms. Ocasio-Cortez in New York. She, folks like her, they're not so keen on the state and local tax deduction. So, as we're looking forward at, maybe some sort of corrections bill to the Tax Cuts and Jobs Act from a few years ago, that could be something included, but we probably won't see anything addressing the state and local tax deduction until there's some more agreement and kind of more momentum behind one unified position on it. And then the other issue I've gotten a few questions this week about is mortgage debt relief. That bill, that was part of the tax extenders package that usually was passed around Christmas every year. That was not passed about a year ago, so that provision has lapsed. Right now, there isn't a whole lot of activity on the tax extenders. There's a lot of people in the Senate that want to get these passed. But again, some of those progressive folks, and on the conservative side, there's a lot of people who aren't quite sure they want to pass another set of tax extenders. So it's something that we're working on, trying to get this passed, but it could be a little while before we see some movement on it. All right, so access to credit or GSE reform, so like Fannie and Freddie, this is a big issue for NAR. It's something I think with mortgage finance you're going to start hearing a lot more about. The president actually just unveiled the new plan a couple weeks ago. We, as an organization, commended the president on issuing a plan on this. This is something that's very important to our industry. And the fact that they're starting to engage in that conversation is a good sign. NAR, we actually, earlier this year, in February, we unveiled our own plan. It's kind of 3 key things I like to tell people to remember about it. Number one, we want to increase access to credit. Number two, we want to minimize disruption in the market. And number three, we want to make sure mortgage costs remain low and keep them low. So those are the three priorities there. We do have some differences with the administration, but there were some things that we agree on with them. And also keep in mind, anything that is going to be major change would have to go through Congress too. So there's limited things the president can do administratively. All right, health insurance. So association health plans. This is something we're currently in litigation about, and we are working with the administration on getting something done here. They issued a rule that would enable associations to issue health insurance plans for their members. There are a lot of kind of quirks in how you would do that nationally. So NAR is working with our legal department and our member services to kind of figure out how to go about that, but a lot of it right now is hanging on this lawsuit. So it should be a little bit before we see NAR offering anything on this, but it's definitely something we are working on and pretty excited about. All right, so technology, as I mentioned in infrastructure, we kind of take a broad view with that. We include things like rural broadband in that kind of infrastructure conversation for us. The other thing with technology is there's a lot of talk about data privacy and how you manage consumers' data. That's something we've been engaging on with all of the senators and members of the House that are talking about legislation for folks like Facebook, Google, all of them, because we want to make sure that any sort of privacy law does not impact our members in a way that would be detrimental to your business. So it's something that we are keeping a very close eye on. The other thing is we've actually started a new department in NAR to look at emerging technologies and things like artificial intelligence, blockchain, look at other disruptive technological forces in the industry and see ways that NAR can collaborate and make sure that our members are at the table when these technologies are developing. So pretty exciting stuff. I know the team they just hired, I think they're 3-4 people in the last few weeks, so they've really been growing quickly. And a few other bills and issues wanted to update you all on. So there's a financial literacy bill that Joyce Beatty from Ohio introduced. This passed the House overwhelmingly. We're currently waiting on a Senate companion bill, but it's something we're excited about. Basically, it would help first-time home buyers with FHA loans. They would get a discount if they went through financial education. Small discount, I believe it was 1/4 point, but it's good. And then condo rule, this is something I interned at NAR quite some time ago, and this was still being discussed then. So the fact that we were able to get this out now was a really big win. We're excited about this. It'll take effect, I believe, October 16th. And we think this will really help the condo market and hope it'll make it easier for people to qualify for loans for condos. And then one that's actually late breaking, I want to say it was about a week ago, the Waters of the U.S. rule. That rule was actually repealed, which we're very excited for, and we have lobbied on and advocated on for quite some time. The expectation is the Trump administration is going to come out with a revised rule, and we are at the table working with them to make sure that is not onerous on our members and for private property owners as well. So that's really big news just about a week ago. All right, so I like to put this up here. So to Mike's point, we don't get a whole lot done in DC, and it's pretty consistently. About 3% of bills pass every year. So, just kind of keep in mind when you turn on the news and they start talking about this crazy thing going on in DC, it's probably because that person wants to get press. It's probably not going to pass. So that's good, but, it also means they're not getting a whole lot done. So that's why as an organization, we've been focusing a lot on working with the administration. We've been able to have a lot of movement on things like the condo rule and Waters of the U.S., getting those things done with an administration who's been very collaborative with us on those things. So really good stuff to hear. And then last but not least, wanted to kind of make a plug here. How can you help? How can you help us here in DC, advocate for you all in DC? Remember to vote in all your elections. It's really important. Invest in RPAC. participate in calls for action. They do read those things. I used to be one of those people who read those things. And then if you haven't already, our mobile text alerts are great. Just text realtors to 30644, and you'll get probably 5 max a year. But it's a great way to keep in touch and keep an eye on what's going on in DC. And thank you. So thanks for having me, and obviously I'll answer questions later.
Thank you very much, Zach. Zach did mention RPAC. So we understand the news from RPAC last night. Fundraising, I believe it's a new record. It's $52,500 raised last night. Congratulations and thank you to everyone. Our next speaker today is Nick Mastrosimone. He's an attorney with the firm Harris Beach PLLC, and Nick and his firm are the authors of some of the material that is inside your download documents today on the agenda, so please take a look at them if you hadn't had time to do that yet. Nick focuses his practice primarily on commercial real estate development. He counsels commercial developers, lenders, and investors on the development, financing, acquisition, selling, and leasing of commercial real estate. He also advises clients on the structuring of private equity transactions, raising debt and equity capital, negotiating mortgage loans, and I'm sure a whole lot of other things that we're not listing here. Nick, please come up and join us. Thank you.
Okay, perfect. How's everybody doing? Thanks so much for your time today. It's been an interesting summer. So now we're going to talk a little bit more locally about state laws and what's been changed. Let me just pull up the PowerPoint here. So we'll do questions and answers after. I'll do my best to answer some of these questions on the way. And I was told that you guys are a tough crowd, so I'll do my best here. So Mike touched upon rent regulation. I'm mostly going to focus on the substantive changes to landlord and tenant law. But one of the things I want to point out is some of the vacancy rates that are in the state. So as Mike said, a municipality has to declare an emergency. The emergency requires showing that there's a vacancy rate of 5% or less. So as you can see in the upstate region, the vacancy rates are quite high. Buffalo, Cheektowaga, Niagara Falls, you see 7.3%. City of Buffalo, 15%. Livingston, Monroe, Ontario, Orleans, 7.3%. The City of Rochester, 12.4%. These are relatively high here. And if you look at a little bit more downstate, it's a different picture. Dutchess County, 1.5%. City of Poughkeepsie, 1.8%. Albany, Saratoga, Schenectady, Schoharie, and Rensselaer counties are 8%. Broome County, 6.9%. So this is HUD data and some other sources. But as Mike said, how you calculate 5% exactly, that's up for debate. The law didn't specify a process or a means of doing so. So if a municipality is determined, it might, come up with some study that potentially hits the 5% number. And I'm going to scroll down here. This is some more rent regulation stuff. Sorry. All right. So currently the law is being challenged by the Community Housing Improvement Program and the Rent Stabilization Board. The Rent Stabilization Association. A couple claims made against the law is that it's a violation of procedural due process, and also that there's takings of private property without just compensation. So currently this action is in the pleadings phase. There's a lot more to go with it, but we will see what happens, and I'm sure NYSAR will keep you updated on this matter. Yep. Thank you, Anthony. All right, so now we're going to move to the substantive protections of tenants. The law that was passed in Albany June 14, it amended certain sections of the real property law, the real property actions and proceedings law, which deals with evictions, and also the general obligations law. The obligations law is mostly dealing with security deposits and advances, and there's some pretty substantive changes there. So first, under the old law, a residential landlord was under no duty to mitigate damages unless the lease required the landlord to do so. So practically what this meant is that if a tenant were to vacate the premises, the landlord could leave the property vacant and still collect rent up to the end of the lease term in an action that's brought against the tenant. This used to apply to both residential and commercial. Now, the law the new law requires a residential landlord to take reasonable and customary actions in good faith to rent the premises at fair market value. So essentially here, the landlord's ability to recover rent in the event that a tenant vacates is limited, requiring the landlord to take good faith steps. So for instance, putting the unit up in the market, trying to release it. If the landlord doesn't do these things, then damages against the tenant could be limited. This does not apply to commercial, however. This is just residential. All right, another hot issue, security deposits and advances. Previously, this was unregulated. A landlord could require first month, last month, plus a security deposit. The number itself was not capped. Now, under the new law, the aggregate deposit or advance collected cannot exceed 1 month's rent. So I take the opinion that this applies to any kind of deposit, pet deposits, garage deposit, prepaid rent, all of these things that were previously collected are under the scope of this law, such that the total amount a landlord takes can't exceed 1 month. There was a question raised earlier about whether this applies to all kinds of dwelling units, for instance, a multifamily, or whether it applies to just a house that is being leased out. According to a red line of the law, as you can see here, previously, Section 7108, which contains a limitation, was limited to 6 or more dwelling units. That was deleted in the text of the statute, so this applies to all dwelling units. There's another question, does this apply to vacation rentals where the term of the lease is, let's say it's a vacation rental for a summer, and the owner of the house requests that a payment is made for 2 months of possession. I take the approach that rather than characterizing this as an advance, it's instead your right to possess the property for that time period. It shouldn't be applicable to these unique situations. Some other things, it's funny, it's the cause and effect. So these laws are adopted. Now we're in the stage of trying to interpret them and see what they mean and how they're going to be applied. And there's talks, some landlords are talking about having quarterly rental payments as opposed to monthly. That's a way to mitigate risk. Additionally, some other landlords are thinking about having a front-loaded rent payment schedule. So the way that would work is take a 12-month lease. Ordinarily, it would be $1,000 a month. And under the old law, the way things were done previously, the landlord would say, I want first month, last month, and a security deposit, total of $3,000. In response, potentially landlords are thinking, let's adjust the rent payment schedule so that for months 1 and 2, the tenant pays $1,500, and then we provide a credit for the last month. So essentially, the landlord is collecting what would be that $1,000 attributable to the last month up front, and that's through changing the rent payment schedule. Also, could this affect lower credit tenants who who otherwise wouldn't be able to get the unit, but for having a security deposit, putting down in advance for the last month. There's talks about having guarantees, having the tenant agree to a guarantee, but again, if you can't collect rent from the tenant, what's that worth? Additionally, this is pretty significant. So under the old law, there was no time limit that a landlord had to return security deposits. It just had to be a reasonable time. So the new law gives certainty to this, requiring that a security deposit must be returned within 14 days of the tenant vacating the premises. Also, prior to occupying the property, the tenant also has the right to inspect the premises. And if there's any conditions that are noted, you know, a hole in the wall or bad carpets, the landlord and tenant could enter into an agreement noting that there's those issues, so that later on down the road, the landlord can't try to hold back some of the deposit because of these issues that exist before occupying the property. Also, landlords must provide tenants with an itemized statement. If the landlord fails to do so, your right to hold back some of the deposit could be forfeited. Also, if you don't give back the security deposit within 14 days of the tenants leaving the premises, you also forfeit any other damages that could have been collectible. So, you know, you've got these significant limitations here. So what are the possible penalties for violating these limits here? Under the law, any person who violates the provisions of the subdivision shall be liable for actual damages, provided a person found to have willfully violated the subdivision shall be liable for punitive damages, which is an amount usually in excess of actual damages, of up to twice the amount of the deposit or advance. Also, the Attorney General could get involved if they hear of such issues and there's complaints. There is power provided to the Attorney General to come after landlords. Next, application fees. Under the old law, application fees or any other amount demanded from a tenant was unregulated. Under the new law, no landlord, lessor, sublessor, or grantor may demand any payment fee or charge for the processing, review, or acceptance of an application, or demand any other payment, fee, or charge. This is pretty broad. It conceivably applies to any kind of fee a landlord could demand from the tenant, but also note that it's limited to the beginning of the tenancy. So that could be a potential workaround for landlords. So it could be interpreted to prevent landlords from charging tenants a brokerage commission as well. But in response, landlords may instead try to spread the commission out over the course of the tenancy, which of course would result in rent rising. Does this apply to management agents or to brokers? And as Anthony shared with me a couple days ago, there's some guidance from DOS that states that an agent acting on behalf of the landlord cannot collect fees in excess of the statutory limit. To co-ops, also from that Department of State guidance, it does not apply to agents representing a co-op, but again, that's just the DOS's interpretation. Usually co-ops charge a pretty significant application fee, and you know, subject to how the law gets interpreted, it could be applicable. For instance, there's some cases where New York courts have viewed cooperative relationships, that proprietary lease, as being similar to any other ordinary lease. For instance, certain sections of the real property law apply to a co-op. So the argument goes, why not have this law also apply, why not have the application fee limit also apply to co-ops? And here's the DOS guidance that I was talking about. It does not apply when a property does not apply to co-ops when the property is being sold. And again, this is just one interpretation. You don't know how courts may view this. All right, next, background and late payment fees. These are also limited under the new law. Fees for background checks are limited to the lesser of the actual cost, or $20. With respect to late payments, a landlord can no longer demand any payment, fee, or charge unless the payment is more than 5 days late. Also, the amount cannot exceed the lesser of $50 or 5% of the monthly rent. I was looking at a couple form leases, and prior to the law, you might have late payment penalties that are in excess of the new limit. So if you have a client with multifamily units, I'd be sure to say, hey, in addition to the late payment fees, what else could be running afoul of the new law? Retaliatory evictions. Previously, a landlord could not try to evict or go after a tenant if the tenant made a good faith complaint to government for alleged violations of safety ordinances. Under the new law, this has been expanded to apply to complaints made to the landlord or the landlord's agent. So the practical effect is that if a landlord commences an eviction proceeding against a tenant within 1 year of a complaint that the tenant made to the landlord, it will be presumed that the eviction is in retaliation. So that's another thing a landlord would have to overcome in the event that a tenant potentially brings this issue up. Notice requirements. So prior to increasing rent greater than 5% above the current rate or deciding not to renew a tenancy, the landlord must give the tenant notice. The amount of notice required varies based on the term of the lease or how long the tenant has been occupying the unit. As you see, if the occupancy or the lease term is greater, the landlord has to require a longer period of notice prior to raising rent or not renewing the lease. Okay, also, tenants have some increased protections now in the face of eviction proceedings. The effect of all of this is to draw out the eviction process. Also, damages are limited. Under the old law, a residential landlord was permitted to collect additional rent as damages during the proceeding. Under the new law, the definition of rent has been redefined, so it doesn't include additional charges such as whatever you could think of, additional rent, utilities, insurance. If that's being charged to the tenant, the landlord cannot collect that in an eviction proceeding. Timing. So this is the most significant change that came out of these procedural protections. Previously, the landlord had to make a demand for rent, minimum 3 days. Under the new law, it has to be 14 days. Serving a warrant of eviction requires 14 days notice as opposed to 3. And if during the proceeding the full amount of back rent is paid prior to the hearing, the proceeding must be dismissed. Also, tenants have basically a statutory right to adjourn the eviction proceeding for a minimum of 14 days. Previously, the tenant had to show cause as to why the proceeding had to be adjourned. For instance, getting witnesses to testify or other legitimate reasons. Now, it's a statutory right that's been baked into the Real Property Action and Proceedings Law. Another thing that came out of that was amended earlier in April 2019, it's income discrimination is now prohibited. I'll be short with this, but basically, owners or lessors of multifamily housing cannot prohibit or refuse to accept a tenant on the basis of source of income. So if the tenant applies and the tenant has Section 8 housing vouchers, the landlord's basis for refusing to sign a lease with that tenant cannot be on the basis of housing vouchers or whatever other source of income. So this is something to watch out for. We had a client that was getting applications from multiple Section 8 housing voucher tenants, and if you hadn't known this, you could potentially be setting yourself up for penalties down the road if you refuse to lease the unit. So some possible consequences. So as you can see, as Mike talked about, the expansion of rent regulation is a cost it's an uncertainty, and it could affect the pro formas that were used to, determine whether or not to invest in a particular property. It could affect NOI. It's also uncertain how these new laws will affect commercial lenders. If you're trying to get an acquisition loan on a property that's potentially subject to rent regulation, but it hasn't been passed yet, a bank might be hesitant to even extend the loan because automatically your revenues are capped year over year. So it's something to watch out for. You could see a shift in markets from downstate up to the upstate region, given that they have a higher vacancy rate. So it might be less likely that rent regulation could be applied. That's yet to be seen. Also, the potential costs could be passed on to tenants in unregulated jurisdictions, resulting in rent increases. And also, what's this going to have? What effect is this going to have on buildings that are built pre-74 and that had multifamily units in it? As we talked about, these are one of the classes of housing that might be subject to the law. So, will there be less investment in this kind of building? Also, there's issues. How do you define the scope of the buildings that are subject to the laws? And as we talked about, what came out of Albany was an expansion of a law that was in effect since 1974. At that time when the original law was passed, it cast a broad net on all buildings that were within the area, within downstate, within those counties that were subject to it. So now you're trying to apply a law passed in 74 without exactly defining how it's going to apply to buildings. And here's just a little graphic here. You could see restructuring away from multifamily if you perceive this as being a great risk going forward. Some people who are risk averse say, hey, it's just a cost of doing business. We're gonna figure it out. So thank you, appreciate it.
Nick, thanks for all the good news. We appreciate that. We'd like to open it up for anyone with questions. Please come to the mic and introduce yourself.
Hello.
Oh, yeah. Let's see. Marcia, please.
Is it working? There it is. Okay.
I'd like to recognize Marcia first, please.
Thank you. Thank you, Nicholas. That was enlightening. First off, this is a NYSAR question. Will the slides be available to us after the presentation? I don't know. I think Nick and I can talk offline. Okay. Fair enough.
How about Zack, too?
Okay, so my
Zack will
question,
provide his slides.
my question to Nicholas is this. If a non-voucher tenant comes under eviction, is brought into an eviction proceeding, and then that tenant applies to and gets help from a city program, does that mean that a landlord cannot continue the eviction?
So just to make sure I understand it. So,
They are a non-voucher tenant
right.
up to the point where they're going to be evicted, or they're in the eviction proceeding.
So did your
Then
question?
they then apply to the city to get assistance to remain, to make their rent payments. Does that mean that a landlord cannot then continue the eviction?
Does your question come out of the source of income discrimination issue, or is
Yeah.
it okay? I'm not exactly sure. I think that.
Or how would you, see?
Yeah, I mean, it's the amended human rights law added. I could pull it up exactly, but basically it states that you can't discriminate on source of income when entering into leases. So your question is, if during an eviction proceeding, you're evicting the tenant for what I presume is to be some lawful reason,
Right.
and then the tenant gets some form of assistance.
Of which, when you get the assistance, you have to have a lease. So that would be actually entering into a lease. I mean, if we're going to be really technical.
No,
Yeah, no, I don't think, I mean, the reason for the eviction proceeding on our hypothetical here is, it's a lawful reason, non-payment of
Right.
rent.
Right.
Up to that time, I don't think the human rights law is that expansive. I could check, but my gut feeling tells me it shouldn't apply.
Okay, so you're saying that they could still be evicted.
No, I'm not sure. I mean, again, it's
Okay.
very fact specific.
yeah. Yeah, so they're not entered into a lease.
Thank you anyway.
Right. Hi. Barbara Ford, Long Island Board of Realtors. The presentation that you made, is that going to be downloaded? Because I could not write that quickly. Pardon me?
Yeah, I'm going to talk with Mike about providing it.
Fine. You had some new points in there. They were good.
Tony Danziger, Hudson Gateway Association of Realtors. Just a couple of quick questions. Background checks, on your thing on there, you said $20 or actual cost. It's a lesser of?
The lesser
Okay.
of, yep.
So if a property management company has tenants apply online, submit a rental application online, and then uses a third-party company where the tenants log in and do their background checks and pays the third-party company separately, is it still $20? Or because they're using the third party, it doesn't matter? It's not.
Well, if the landlord requires going through a third party that has an application fee greater than $20, I think you could potentially apply, but if the landlord's like, look, you're free to go wherever you want, provide the background check to me and make sure it's from an accredited company, and it happens to be greater than 20, I don't think it would apply.
Okay, so as long as you give the tenant the option.
Right.
Okay. One of the things I didn't see in one of your slides was that now the law requires that you provide a late rent notice on the sixth day, no earlier than the sixth day of the month if the rent is late. I don't think the law specifies when that has to be served in conjunction with the rent demand. So for example, I can't serve a rent demand before the sixth day of the month, but I have to serve a late rent notice. But it doesn't say if I have to wait to serve the rent demand, a certain number of days after I serve this late rent notice. Is there a time requirement as to how soon I can serve the rent demand? Or can I serve the rent demand the same day that we serve this 5-day late? No, the rent demand is a 14-day rent demand. My question is, when do you serve the rent demand in relation to this 5-day late rent notice that has to be served by certified mail?
I'm not sure about that. I don't think the laws specify an answer in respect to the 14-day notice you're talking about. That's, something that's subject to interpretation here going forward.
And just one final quick comment. The 90-day notice that must now be given to tenants who are in occupancy for over 2 years, as I see it, that could be one of the most devastating consequences for small landlords, because once these tenants get a termination notice, they will stop paying rent. So you're looking at 90 days of not getting rent, plus potentially another 2 months at the earliest that you could evict someone, at least in upstate New York. So you're looking at almost 6 months of a small landlord not getting his rent. Is NYSAR doing anything to at least try to create some sort of amendment to the law with respect to something like that?
That's above my pay grade.
Tony, great question. At this point, no. We are in the midst of collecting technical and places where the law needs to be clarified. I can honestly tell you there will be zero appetite to amend that provision. It's in there for a reason, to be pro-tenant. The legislature, I told you earlier about the makeup of the legislature, downstate driven, Democratic leadership, strong support from that side of the aisle for this law. That there will be zero appetite for amending the law. Lawmakers are reluctant to, after passage of law, to very, very quickly turn around and say, oops, we made a mistake.
All right. Thanks for being here. Quick question. Do the new laws affect existing leases executed prior to the laws going into effect, or are existing leases grandfathered and then subject to the laws under renewal? So if I already have a lease in place where some of those late fees, et cetera, exceed the provisions, what do we do with that?
I know Anthony has an opinion on this. So for security deposits, you think that doesn't apply?
Unless subsequent renewal leases mention it more specifically, other than just incorporating previous one by reference, that would be okay.
Okay.
So, for security deposits, so long as the prior lease, at the time it was executed, prior to July 14, 2019, is subsequent renewal leases that are signed by the tenant, don't specifically cite the security deposit, but incorporate it by reference to the prior leases, I don't believe the landlord has to refund the difference in the security deposit between what's permitted now and what was permitted before July 14th. And I've heard no opinions that they would have to yet.
So the existing leases are still good?
Certain provisions of the existing lease are still good. Security deposits, I don't believe they have to refund. Late payments, I believe that would be effective.
Yeah, like those sections would actually.
Sure.
So all that.
Sure, but like, so the security deposit is payable upon signing of the lease. If that happened before July 14, 2019, I don't think you have to refund that money back to the tenant, because that was done before the law passed. As compared to other provisions which would come into play after July 14, such as late payment fees and things like that. Okay? Does that make sense, Nick?
Yep. No,
Okay.
We've got about 5 minutes left, so that we'd like to recognize the folks that are already standing, and then we're going to wrap this up.
I think I have 3 questions. Hopefully they're short. Lori DiFrancesco, Hudson Gateway Association. Number 1, on the 5-day late payment, I thought I read your brief. I thought having it signed at the time of the lease was notification that a late payment is due after 5 days. A separate letter has to go out on the 6th day? Did I just hear that?
I think it's, you have to make a late payment, or a demand for late payment has to be 5 days. So I'm not sure. I'm sorry, what specifically are you asking for?
My question is, in the lease that they've signed, they have agreed that if payment is not received by the 5th day, there is a late payment.
I think under the new law, you have to give notice.
Okay. My 2 other questions, as short as I can. I understand the 1-month deposit. I understand the quarterly, no last month. But when we do lease signings, we take a 1-month security and the first month rent. That is still permitted, am I correct?
So my response is, are you, in exchange for giving first month and security, is the tenant getting the right to occupy the property?
Correct.
So under that case, it's not in advance. You're paying rent just as you
Okay.
normally would.
Last question, and this is the only one that scared me. We in downstate do our rental business whereby there is language, the landlord pays a fee when he signs the listing, and there's language in our listing that states the landlord requires the tenant to pay the commission fee. Where are we on that? And I thank you so much for all your work.
So as the slides showed, the law is really broad in scope. So it prohibits any kind of fee prior to or at the beginning of the tenancy. So if the tenant is required by the landlord to pay a commission, potentially this could be scooped up within the law and prohibited.
So I've been telling them, well, how many people were not at the legal update? Yeah, okay. So as protection, try to call them commissions instead of fees. And the reason why is our defense would be Section 440 of the Real Property Law states
they intended to include commissions, they would have used the common term commission. That would be our defense, and even if there's a lawsuit about that. And I think that's probably the best practice we do going forward if you want to get paid at the onset of the transaction. If you don't mind waiting until the 12 months is up, that's up to you, but I think most of us want to get paid at the onset, not at the tail end of it. So that's our best practice advice to you.
Second to last question, please.
Okay, mine's not actually a question. It's really more of a statement and a thank you. I'm Andy Turco-Levin from Ulster County, and I do live in Kingston, and we are one of the towns that are going with the rent control. So thank you very much, by the way, for all this fabulous information today. But I do want to thank Mike and Connor, who has been attending our meetings in the city and following this with great fervor and has really kept us up on top of it. We are seeing gentrification coming in very, very quickly. Airbnb has really pushed our rental market to zero, but it is affecting the landlords. It is affecting our market, and it is also affecting our development. We have a very, very vocal advocacy group that is trying to block new development that's not affordable housing and all. So we're seeing a great thing, and we're also, a great change. And we're also seeing a lot of other landlords that are getting ready to sell their properties. So it's a huge impact for all of us, but thank you so much for the NYSAR group and everybody. Thank you.
Thank you for your comments.
Juan Baronecci, Long Island Board of Realtors. Would a mixed-use building with less than 4 residential units be subject to rent regulation?
No, it's only, so it's, yeah, anything with 6 or less, you're not subject.
And if it's commercial and it has 6 or more?
If it's commercial, I don't think red regulation is just residential.
Okay.
So.
Hi, I'm Melissa. A few questions. One, can a landlord recoup legal fees from the tenant if it's written in the lease?
I know there are sections of the landlord-tenant law addressing this. So if it's unilateral, meaning only the landlord has the right to collect attorney's fees, then that's presumed that the tenant also has the right, even though it's not written into the lease. So I don't think that's been affected.
Okay. With regards to credit and background checks and having vendors, would it be okay for a landlord to say, we have these 3 approved vendors? You can go with either one, pay them directly, whether it be more than $20 or whatever, but you can go with one of these 3, and then that would be a credible report.
If, again, like how I answered earlier, if one of them is less than $20 or 20 or less, and you're not forcing the tenant to go to a particular vendor, I don't think that should be an issue.
Okay. And my last question with regards to co-ops and subleasing. So when you're subleasing from the sales side, when you're actually looking to rent to a tenant and it's still subject to board approval, on the sublease, the co-op will have fees, application fees associated with that. What are we doing then?
So does it apply to sublessors, right?
Yes.
Okay. Yes. I'm pretty sure I could go through it again, but it's broad. No lessors, grantors. So sublessors are probably included in that definition there. So it could apply.
Can you step to the mic, please?
I believe from reading the law, while you can still go after legal fees, you can no longer do it in landlord-tenant court. And I think that's the most important thing. Anything that is not rent, whether it's legal fees, whether it's late fees, whether it's costs for repairs that you charge back to tenants, none of those things can be, you cannot seek relief to recover any of those fees during the course of a landlord-tenant proceeding. You now have to sue in small claims court. And I'm wondering if maybe Anthony has some information about that as to whether there's some sort of jurisdiction issue between the courts. But that is now a limitation on what landlords can recover in one proceeding, and now we have to sue twice.
In the interest of time, I want to thank everyone. Nick is going to remain in the front of the room. Anyone has any other questions, feel free to bring them to Nick.